Mic'd up. Well, we are live on YouTube already. It's right by your left foot. Can you reach down there?
Yeah.
All right. Let's get going for our YouTubers. Thank you for joining the show here today. Investing and Trading Live. There we go. Hello, everyone, and welcome to the big show. This is Investing and Trading Live, sponsored by Trading Academy. If you're a first-time listener, thank you for stopping by. As always, I am your host, Josh Lillquist, and yes, I have my good friend once again back in the saddle. He is always in that saddle, and he is riding high on his horse, Mr. Al Connickson. Al, how are you doing today?
You know what? I'm feeling pretty good, Josh. How about you?
I'm doing really good. It's glad to have you back on the show. I mean, I have you back, but even though you're on every single week, sometimes we don't see each other every day.
Yeah, there's an occasional time when maybe our schedules don't jive.
You know what? But that's okay. We're always here and we're always back helping our listeners make smart investing decisions.
We are always here for our listeners.
Our sponsor, Trading Academy, on their 29th year teaching people just like you how to invest, how to trade, how to get started in the market if you're brand new and don't know a stock from a rock, or if you're a seasoned investor, but you're in the market with 401ks, IRAs, not actively managing that, but you're looking for a little bit more consistency, especially in those retirement accounts. Trading Academy has strategies, techniques, and concepts to help you make those smart investing decisions. As we know, we had a great week in the markets, and we had a lot of people coming into this podcast that we do here live every week as well. Investing and Trading Live on Apple Podcasts, iHeartRadio, and Spotify. As we say every week, we're trying to make this the global #1 podcast on the financial markets. But here's a quick update on the markets this week. Obviously, the market has been, let's call it, soaring like an eagle, but over the past 5 to 7 days, it's been stuck in that little range as far as the S&P 500 between 6,200 and almost 6,300. So in that little range there. So is it going to break to the upside or go back down? Who knows? Quite frankly, who cares? Because we know that we're going to talk about later. There's strategies for both directions. We have some major stock market moves. Obviously, the investors are shrugging off tariff threats, but they're focusing on inflation and earnings. We'll talk about that up in the coming segments here as well. But NVIDIA, we talk about this every single week, will rise 4% after resuming H20 AI chip shipments to China. Really pushing that market cap above $4 trillion. If we have some clapping here on the podcast, there we go. Way to go, NVIDIA, looking really good. We'll talk about that a little bit later. AMD gains on analyst optimism for AI chips, and they've been really in that competition with NVIDIA. CoreWave, they jumped 7% after a $6 billion AI data center investment, and that was announced for Pennsylvania. So talking a little bit about energy, we talk a lot about oil, but not so much on natural gas. But natural gas futures climbed 4% due to supply constraints and weather-driven demand. So the energy sector, as far as natural gas, showing some strength here this week. Obviously, the financials and earnings, as I mentioned a little bit ago, banks are a little bit mixed over this time period. J.P. Morgan and Wells Fargo, they dip as Citibank, Citi is what they call it. They rise after beating Q2 expectations. A couple other stocks, you got Johnson & Johnson, up 5.5% on strong Q2 earnings. You look at Johnson & Johnson, I believe it was Wednesday, big move on Wednesday. Fastenal surges about 4% post earnings, and they cited improved contracts despite market slowdown. So the volatility is continuing. We're going to talk a little bit about Johnson & Johnson probably in the second or third segment here. Great volatility for options traders out there, so we'll talk about that. Obviously, we have tariff development. It seems like that T word comes up every single day. Trump proposes 50% tariffs on copper imports starting August 1st and 30% duties on Mexico EU goods. But markets they actually remain optimistic and expecting softer policies. So obviously core CPI, that was up 0.3% monthly and 2.7% annually, matching estimates. So not a big change there. That's the consumer price index. And investors reduced the Fed rate cut bets. So there's a little bit of a change of a tone there now with the Fed rate there as well. So Al, we got a lot more to discuss on some other stocks. I want to get your quick opinion on some of this volatility. Obviously, Trump's tariffs. There's a thing called taco trade. I don't even know what that is, but it sounds pretty cool. Give me a quick insight here.
Well, what we're seeing are basically let's just call it what it is. They're opportunities, and we're seeing a lot of reasons for these opportunities. You mentioned the name Trump. Trump has made a lot of comments. He's made some kind of promises and then kind of come back from those. Those are all creating movements in these markets that we can take advantage of. So we actually kind of like that sort of thing. Same thing is happening with Elon Musk. But I think what we're also seeing is that the market is becoming less sensitive to some of the things that it used to be sensitive about. I mean, we used to see the market make big moves up or down based on what was happening between Ukraine and Russia, Israel and Hamas. Now, not so much. It's just that the markets become less sensitive over time.
And all it is what's the headline today is really all it is.
Yeah, and there's always going to be a new headline that's going to cause some short-term movements. And what we see is a lot of times the headline news causes maybe a big move up or down, and we know it's going to be short-lived. So that's an opportunity if you understand how to take advantage of these opportunities. But what it really gets down to over time is looking at things like earnings. You mentioned earnings. We're going through earnings season now, and that's what people are looking at. They have certain expectations for companies. If people meet their earnings, it might move the stock, maybe not. There's a whisper number that can have a big impact on a stock. But if companies miss their earnings, especially the companies like the Magnificent Seven, the big ones that are very highly valued, if they have any kind of a blip, then they really get punished. So there's a lot of things we can look for. And if you know how to use the markets properly, if you're properly educated, you can be prepared to take advantage of those moves.
Yeah, and that's what really our sponsor does, Trading Academy, is educates the people on these markets. People just like you that are trying to get started with making smart investing decisions. And Trading Academy is a physical academy, a place where you can actually go to gain that financial literacy, learn how the stock market works, how it functions, but also learn more about your retirement accounts, IRAs or 401ks, 403bs, TSPs. There's several different types of those accounts out there. So if you have more interest on that and you want to gain some more insight, we have free investing and trading workshops that we do locally at the Academy here and all across the metro. Obviously, we have our state-of-the-art facility right here in Bloomington, right where we host the show, Investing and Trading Live, and to come in to gain some more insight and gain that financial literacy. I'd like to invite you to this free investing and trading workshop simply by just texting the word investing to the number 210-210. But you got to do that right now. You're going to get a link and a text right back. You click that link and go straight to our landing page. If you're an interweb type person, just go straight to tradingacademy.com and you can pick your own seat and date there. Al, we have a lot more to discuss. We got Netflix, Tesla, Oscar Health, other stocks we're going to get into, and these great moves in the market, these markets. And what's that next headline? Stay tuned. This is Josh and Al, Investing and Trading Live. We will be right back. All right, we will stay live on YouTube. So Saturday, today's Wednesday, right? 19?
Yes.
All right. Yep.
I don't know if I'll be back today or not, but I will let you know.
Okay. All right. See you. All right, here we go. Segment 2. If you got questions on YouTube, feel free to ask any questions on YouTube. And hello to everybody. I've seen some people said hi. Welcome to the show. Hopefully we keep you on and keep you interested over the next about 45 minutes or so. So we're going to stay live throughout the whole show here today. All right, segment 2 coming right at you. Welcome back to Investing and Trading Live, sponsored by Trading Academy. As always, I am your host, Josh Lillquist, and your navigator on this boat of a roller coaster, we'll call it, of these markets. We're talking about other stocks. We're talking about Johnson & Johnson in the last segment. We'll get into some insight on that, some great volatility, and the boat is just a rocking with that one. We're going to get into other stocks like NVIDIA, AMD, some analysis on that, Netflix, Tesla, and Oscar Health. As we know, we had a lot of people texting in and going to the website for these free trading and investing workshops locally here at Trading Academy. Trading Academy is the world leader in financial education. Simply just text the word investing to the number 210-210 right now for 2 seats for a free investing and trading workshop. Text the word investing to the number 210-210 for that free investing and trading workshop, or just go to tradingacademy.com. You can pick your own seat there. If you're an old school caller, you can call 952-814-4410. That's 952-814-4410. We'll get you one of those seats today. So Al, on this next segment here, we have a few more stocks that we want to get into and discuss a little bit because the volatility is phenomenal. Obviously, Netflix always shows volatility. That's up 1%, but really faces that downgrade due to valuation concerns ahead of that July 17th earnings that they had. Tesla, investors await that Q2 result and robotaxi updates. It's amazing how you have these robotaxis. I was just talking with somebody here yesterday, and they were concerned. They were a truck driver, very concerned about AI and robots taking their job.
You know, they should be.
Yeah, and
There are a lot of there. That's just one area. There's a whole bunch of people out there that are going to be surprised at what the future looks like as far as their career is concerned.
Yeah, he said that's already started. He said there's already trucks that are we call autonomous.
Mm-hmm.
So which is crazy out there, but we're going to see more of that. Obviously, Oscar Health, they had mixed sentiment after downgrades, but viewed as that's really undervalued, and that's by some people. Who's some people? That's quote unquote they. But here's the story of the week, the month, and quite frankly the year. Tech leads. Tech is driving pretty much everything right now, driven by AI and chip stocks, and that's those NVIDIAs and the new one out there, CoreWave and AMD. So those are the drivers of a lot of these market gains, I feel. So Al, I want you to just give some insights here on a couple stocks that we talked about, and I'm going to talk more about why it's important to gain financial literacy on these. So you've talked about Johnson & Johnson in the past, right? So Johnson & Johnson, it's at about $165 per share. On Wednesday, what happened? It was at 157, jumped right up to 165, and that was before lunchtime, before noon. Mm-hmm. Now, a lot of investors think, oh, Johnson & Johnson is big move in the market. We got to get in now, right? But the move's already happened. How do you help people get away from those emotions of getting in after the market moves? And then what do we do here at the Academy to change that thought process?
Yeah, well, what you just talked about with J&J, a lot of people might be thinking, well, the move's already taken place. And that may be correct. The big move might have taken place and there might be a pullback. But the big move might have been just the beginning part of another big move. Every company at one point in time was at a record high and people thought it couldn't go any higher. And then it doubled or tripled or quadrupled after that. If you look at NVIDIA, for example, NVIDIA didn't come out at over $100 a share. You know, it started, and I don't know actually what the price was when it came out, but it's had probably 100, 200, 300 new highs over the course of the years.
It seems like, yeah, every couple months. I mean, we're not at a high right now, but just was back in January.
Yeah. So what you want to do, as much as possible, just take the guessing out of what you're doing when you're investing and trading. A lot of people, if they don't invest in J&J because they think they missed the move, might miss the next move, and that's because they invested based on their opinion.
So what does Trading Academy do differently to help people get out of that retail trader mindset?
Well, whether you agree with them or not, you have to learn how to trade with the Wall Street banks. Those are the big firms like Goldman Sachs, JP Morgan, because their activity actually creates the reality in the market. That's what causes things to go up and to go down. And to be honest with you, Josh, market and asset moves can be manufactured by these companies to create a desired result. So the big money, those companies I just mentioned, can profit. Hedge funds, same thing. So you have to be able to, as much as possible, try to figure out what they're doing and be part of what they're doing, which means you have to identify in a way what they're going to be doing in the future. Those companies, when they invest in something, they take a position because they're pretty sure it's going to be profitable for them. So if that is the case, and they are profitable, a lot of these companies never have a loss. There are hedge funds that have never in the history of their company had a loss, even in big down losing years. So it's really important to be able to understand that those companies, the hedge funds, the big Wall Street banks, have what's called clout, which is money. They have enough money to move the price of things. So to be successful, you have to have an edge, something that puts the probabilities in your favor. And more, I think, than any other thing out there, it's the movement of money. It's the movement of price of these assets caused by institutions that's going to give you that edge. So, but you have to be able to find what they're doing. Our core strategy, which is what our students use no matter what they're trading, what the asset is, what the time frame is designed to exactly do that. It's just built based on order flow on price movement.
And that's interesting because if you look at the price chart of Johnson & Johnson, it's actually, fortunately, unfortunately, whatever you want to call it, at the same price it was back in January of 2021.
Yep.
So Johnson & Johnson hasn't really moved, but it's in the headlines. That headline came from, I believe it was CNBC.com, right? So these companies are putting out, it's just news is what it is. You got news companies like Finance or Yahoo Finance, Investopedia, Routers. So there's different outlets that is giving information, right? But information without application, it's 100% only entertainment.
Right.
And that's why we have these free investing and trading workshops right here at the Academy. So that way you can gain some insight on what's actually happening based off price charts and making smart investing decisions, but understanding where the banks and institutions are moving these markets from and where could they potentially go. And that's how you do that, is have those areas of interest, following them, not trading and investing against them. And we illustrate that in these free investing and trading workshops that we do locally right here at the Academy. If you want to come into one of these investing and trading workshops, simply just text the word investing to the number 210. That'll be for 2 seats for a free investing and trading workshop. That's one for you and one for a friend. Text investing to the number 210, or go straight to tradingacademy.com and you can pick your own seat and your own date there. Another stock that I want you just to illustrate a little or talk a little bit about is CoreWave, or CoreWeave, I guess you would call it, CRWV. I don't even know what they do, but they're AI data is what they are. I'm not exactly sure what they do, but they had that $6 billion AI data center investment announced in Pennsylvania recently, and the stock jumped 7%. Well, so it's in the news right now, and that's based off data that you can get anywhere, right? For Yahoo Finance, whatever. The interesting piece of that, Al, is so it's in the news, it's in the headlines. It says, oh, it's up 7%. And you know what happens with parabolic moves a lot. It's a parabolic move is a super fast move to the upside. And what typically happens after that, and this is not saying that this is going to happen, is you see a big drop after that as well. So now we have this news that CoreWeave is up 7%. Well, if you look at a price chart, Al, it's already up 300%. And that is only since April. So the move potentially has already happened, but now it's in the news, right? Because of a small 7% move. Now, why is it so important to invest and trade with an actual plan. So now you're not just picking and grabbing things from the news. You actually have a plan and the right stocks to choose from as well.
Yeah, without a plan, you're basically just guessing, and I think I mentioned this last week. If you're just guessing, you might as well just take your money and go to a casino, have a little bit of fun, know you're going to leave without your money, but at least you had some fun
That's
losing
entertainment.
it. Losing it in the markets is not fun. So one of your goals should be is not losing. And in fact, here's what the successful people do. They don't concentrate on how much they're going to make. They concentrate on not losing. And that's the one thing you have to be able to manage. And then also understand that if you have to identify what you are. Are you an investor or are you a trader? And what's the difference? It is simply just time. A trader is looking for an entry and an exit of a position in a short period of time.
And that short period could be a day, a week, a couple of weeks. It doesn't matter.
It's all specific to
It's
you.
relative.
And that's why it's so important to have a plan that's specific to you. So a trader is more short term. Investor, you're just looking at putting some money into something and then hoping maybe in 10 or 20 or 30 years you have a profit. But just remember, as traders, and that's what, to be honest with you, the markets we're seeing now are great for traders, not for investors. And I think most of the pros out there will tell you this is the time to be a trader. So as a trader, you have to understand that you're not making money on the growth of a company. You're making money on the movement of the stock price, regardless of whether it's going up, down, or the stagnant nature of the stock or the asset. In other words, whether it's going sideways, because there's three directions the market can go. So we're just looking for short-term price movement. The way you're going to use the information out there is going to be different than if you're looking at investing long-term. And one of the problems now with the long-term investing, with that buy and hold strategy, it's really hard to predict what is going to happen in the economy and in the world in 2 years or 5 years or 10 years. And that's kind of what you have to do. If you're going to put together a portfolio of stocks and hold on to it for 10 or 20 or 30 years, you're making some guesses as to what's going to happen over that time frame. It's a lot easier to be accurate looking at things short term, because as I mentioned, a lot of these news headlines that hit and the comments that come out and the tweets that come out are making short term moves that we can use to our advantage. You mentioned something earlier. You mentioned it's the application. It's not just the information, it's the application of the information. What that boils down to is skills.
Yes.
You have to have the skills to be able to know how to use the information, how to use the knowledge you have to either be active or maybe not be active.
Yeah, and that's one of the important things I believe that Trading Academy does here, right at the Academy here in Bloomington, is helps guide people through this plan, because it's so easy for an individual to go online and gain some knowledge, right?
Right.
And gain some fun facts or gather information. But if you don't know how to utilize that information properly, you're just entertaining yourself is all you're doing.
Yep.
So that's why Trading Academy has been the world leader in investor and trader education on their 29th year doing that. And we've had so many people coming into these investing and trading workshops and just really saying, it opened my eyes on what Trading Academy actually is and does, and why it differentiates in helping people gain that power back and that control back to what they want to accomplish out of the market. And these investing and trading workshops, they're only 2 hours long to get started, because it's a little bit of information. We're throwing some information, some fun facts over here on the radio waves and on the podcast, and also live on the Josh Lillquist YouTube stream. But that's how you get started, is gain a little bit of information. But now it's time to gain that control and learn what you need to do to apply that information into useful information for what you need to do. So we have these free investing and trading workshops I'd like to invite you to. We have these workshops all across the metro. We have them right here at the Academy at our state-of-the-art facility. We got several classrooms here. We also have different locations across the metro, the north, south, east, and west areas. That way we're coming to a neighborhood near you. If you'd like to come into one of these free investing and trading workshops, just text the word investing to the number 210-210 right now for 2 seats. That's one for you and a friend. Text investing to the number 210-210. or go to tradingacademy.com. That's TRADING academy.com. And you can pick your own seat and date there. We do, gosh, I don't even know how many we do these per month, but several per month. That way we have dates and times that would work for you. So text investing to the number 210 for 2 seats. Coming up next, we're going to continue this discussion on other stocks, some income strategies, and retirement strategies. This is Josh and Al with Investing and Trading Live. We will be right back. Shavers. So all right, so we got segment 3, 1050. All right, so we got for 1050. Anything? Should we talk about some income strategies here?
Yep.
All right, let's do it. Welcome back to Investing and Trading Live, sponsored by Trading Academy. As always, I'm your host, Josh Lillquist. In the last segment, we covered some important topics like having an investment and trading strategy, but it's following those big banks, following those institutions. First off, you have to know who is moving the market. That's who's moving the market. Your Goldman Sachs, your JP Morgans, your big banks or hedge funds, right? But now, once you understand who's moving the market, you have to understand how to trade or invest like them, not against them. And one of those sayings that you hear growing up that you never really knew was true until you got older, if you can't beat them, join them. And that's why we have these free investing and trading workshops live right here at the Academy. We have these several per week. We have all across the metro as well. To come into one of these free investing and trading workshops right here at Trading Academy, text the word investing to the number 210. That's for 2 seats, one for you and a friend. Or go to tradingacademy.com, TRADING academy.com. Also, follow and subscribe to the podcast, Investing and Trading Live, wherever you listen to podcasts, Apple Podcasts, iHeartRadio, and Spotify. And make sure to watch the YouTube stream live as well. We're streaming this live every single week, bringing some insight on these financial markets and opportunities for average investors. So, Al, in this next segment here, I want to get into a topic that everybody talks about all the time. Most people want to have multiple streams of income because that's how you actually build wealth, is multiple streams of income. The challenge that most people have is they don't know where to go. They don't know what to do. Most people know that multiple stream of income as second jobs or third jobs or fourth jobs. Now, the challenge there as well is it takes you away from your family. We're seeing more and more people want more time, their time back, and spend time with their loved ones, their kids. Normally it's the grandkids for people as well, but they want to be able to cherish those times and do that more than just on holidays. So they want to gain their time back, that control of time. Now, the market could be a potential opportunity for an income strategy. You have multiple assets that you can invest or trade in. Obviously, you have stocks. You also have the futures market, the Forex market, the options market. You even have the crypto market. So there's different vehicles that could potentially be used in these markets for another income strategy.
Mhm.
What does Trading Academy do to help individuals, just people that are listening to the show right now? What does Trading Academy do to help build a plan for those income strategies?
Well, one of the things that we do is show you what the possible sources of income are. Most people, as you mentioned, look at a second job or third job or maybe working overtime as a way to do that. And unfortunately, that does take away from you the most valuable asset you have, which is time. But if you're listening to Wall Street, they may tell you, well, we'll put together a dividend portfolio or put you into some bonds. Problem with that now, with the returns that you're getting. In fact, I think I saw just the other day that the average yield on the S&P 500 dividend stocks is about 1.4%.
Woo-wee! That's
So-
man, that's killing it there.
Well, that doesn't even hit inflation. Inflation is well over that. Plus, you're paying some fees there to have that portfolio.
Let's put some insight onto that. $100,000, 1% dividend is
About 10 grand.
whoop-de-doo.
Mm-hmm.
That's actually 10%.
No,
It's
I
$1,000.
I was looking at a
Let me
million dollar portfolio.
Let me fix your math
Let's
there.
go big.
Yeah, it's
Let's go
$1,000.
Yeah.
That's not going to change your life at all. That's not going to do anything for
A
you.
couple of trips through McDonald's, a couple of Happy Meals, and it's gone.
Well, if you're like me, it's probably one Happy Meal and,
Yeah.
and a few other things along with it on one trip. So that's the most challenges that people have. Continue on.
Yeah, and here's the thing I think you need to ask yourself is how much money does it take to make money? And the answer to that is that for most people, it takes too much money to make money. That's why one of the things that we teach our students is how to use leverage.
Okay.
Leverage is one of the most beneficial things that's available to all of us that we're not being taught. Sure, we're not being taught anything in school about how to use the markets.
And just to clarify real quick there, everybody uses leverage in their everyday life.
Yes.
People that purchase homes,
Yeah.
a mortgage is
mortgage.
leverage.
Right.
There's ways, a car, that's leverage. I mean,
If you have a loan on a car.
so
right,
this is what
exactly.
everybody does in their everyday life, but they're not trained on how to do that in their investing and trading strategies.
Yeah.
So continue on what Trading Academy does on building a plan to protect themselves with leverage as well.
Yeah, well, let me comment on one more thing that people unfortunately are using now, and they almost are looking at it as a source of income, and that's credit card debt.
Yeah.
And the credit card debt in this country is hitting highs just almost on a weekly basis. People are going into debt. It's almost like, and especially the kids that are growing up now, a lot of kids have credit cards, and it's like free money to them coming in. They don't realize that the interest rate hit could be between 20 and 30% on unpaid balances.
Which is crazy. That's highway robbery.
And that's why a lot of people are in a retirement crisis. So
Mhm.
how do you get around it? What are the things you can do to use leverage? There are assets in the financial markets that are beautiful for not only generating using leverage, but also for generating short-term income.
And that's BEA, beautiful, for those that are listening.
With a capital B.
There you go.
And we're talking about things like options and futures in the foreign exchange market. We call it the Forex market. Those are markets that people can use. Everybody can use those in a regular brokerage account, but you don't want to use them unless you know what you're doing. That, again, gets down to not only knowledge, but the skills to use that knowledge. Wall Street's not teaching you those things. They want to basically kind of keep those to themselves. And here, one of the things that is a problem that most people have is that people like Warren Buffett and the big firms, Wall Street banks, they're treated differently by the SEC. And the SEC really allows them to kind of hide their trades.
Mhm.
So typically, if a company doesn't increase their ownership of a particular company, if a investment firm doesn't increase their ownership of a company by a certain amount, they don't have to report that for a while. Warren Buffett, we use this example a lot in our classes, put together a position in IBM stock. It took him 7 to 8 months to put the full position together. What I mean by that is he had to do it in increments so he didn't have to release that information to the public.
And they call it scaling in.
They call it
out.
scaling in. I call it stealth investing. So, well, how do you take advantage of that if it's being hidden? It really isn't hidden. It's hidden to most people that don't know how to find it. one of the advantages of the strategy we teach our students is how to identify what they're trying to hide, because they can't totally hide it. So if we can find that, it gives us the opportunity to benefit from the incremental movements that they're doing. If you use leverage, it allows you to take a small amount of money. And again, that's relative. Maybe let's just say a $2,000 portfolio. How would you like to have a $2,000 portfolio that gives you the potential opportunity to control something worth $100,000?
Yeah.
That's how you get the maximum value out of your money. That's how, if you need to catch up, if you're behind where you need to be, and you want to have the ability to be more than mediocre, more than average, which is what the typical investor is getting now with mutual funds. I think I mentioned in last week's segment that Dalbar did a study,
Yeah.
and they showed that the returns for the public over a 30-year period were, I can't remember the exact number, but it was around 3%.
Yeah, we'll have to listen to the archives on that one, Al.
Yeah, but the bottom line is that the public, the retail traders, are not getting anywhere close to what the institutions are doing. What we want to do is show you how to take advantage of what those institutions are doing. Not saying you're going to get exactly the same returns, but you have the opportunity to do a lot better than what most people are told to invest in by Wall Street and kind of advised to just hold on to for a number of years.
Yeah, now we're coming full circle back to what you were talking about. I believe it was in the first segment, is Trading Academy has that core strategy that's designed to identify where those banks and institutions are moving these markets, like you were talking about with, I think it was Buffett earlier,
Yep.
on where are they buying and how to identify that on a price chart with odds and probabilities. So now you no longer have a guess. You have a strategic way to get in these markets, but also that strategic way on when to get out and how to get out. And that's what Trading Academy does here locally at the Bloomington location here. Is we have centers all across the country and the world, and students all across the world. But right here in Minnesota, you're right in your backyard, we have a state-of-the-art facility that actually trains these skills. And that's why we have a starting point where people come in to a free investing and trading workshop to understand what these strategies are, especially if you're looking on those multiple streams or strategies of income and not having to go get another job, but have that job or your money work for you. You do that by using leverage properly. So I'd like to invite you to a free investing and trading workshop to gain some insight on how to utilize leverage, how to do that safely, and how to have a strategy that's designed to have multiple streams or strategies for the income side of things. Text the word investing to the number 210 right now for 2 seats for a free investing and trading workshop, or go to tradingacademy.com and you can pick your own seat and date there. We got a lot more to discuss. Stay tuned. We're going to talk about retirement strategies, 401ks, and IRAs. This is Josh and Al with Investing and Trading Live. We will be right back. All right, so that was segment 3. We're just moving right along today, Al. All right, so we'll go segment 4. Retirements.
Mhm.
All right, here we go. Welcome back to Investing and Trading Live, sponsored by Trading Academy. Once again, I am your host, Josh Lillquist, locally at our Bloomington Trading Academy, bringing the airwaves financial literacy. In the last segment, we covered the income side of things. Most people are looking for an income strategy in their life, not a second or third job, and they want to be able to utilize leverage properly, which is efficiencies in the dollars that you have. And we had a lot of people texting in and going to the website for those free investing and trading workshops locally here at Trading Academy to gain some insight on these financial markets and leveraged strategies. If you missed those seats, simply just text the word investing to the number 210 right now for 2 seats for a free investing and trading workshop. We do these classes during the week and on the weekend, so anybody can attend, or go to tradingacademy.com. You can pick your own seat and date there. Also, follow and subscribe to the podcast wherever you listen to your podcast. That's Investing and Trading Live on Apple Podcast, iHeartRadio, and Spotify. So on this next segment here, Al, we have a lot of people seeking retirement strategies. It's that time of year again where people are having fun on the lakes. They have their campfires, they're on their boats, they're camping and just doing different barbecues with family. And a lot of the topics that you see and hear out there is, boy, you know, when are you going to retire, sir? When are you going to retire, ma'am? Normally your family you don't call sir or ma'am, but when are you going to retire? And that common theme is, well, I wish it was yesterday. But here's what that's where they stop. They don't have an actual plan for retirement. Now, one of the things that you do here at the Academy is help individuals that want to plan for retirement, but they don't want to just rely on a hope strategy or buy a bunch of stocks or buy a bunch of mutual funds and hope it works out. I was actually having a conversation the other day with a nice gentleman, and we were talking about that strategy of hope. And he was like, you know, it's not getting people to where they need to be. Yeah, you might get $100,000 over a course of a lifetime or $200,000 over a course of a lifetime, because I believe the average 401k balance was right around 200 and something thousand. I don't know if you have that stat on hand, Al, but
Yeah, I think that's on the high side.
that's on the high side, which is not a lot of money, because if you think about it, if you want to retire, you're going to need your salary, what you have now, or your yearly earnings, and you're going to have to multiply that by however many years that you think you're going to be in retirement. Well, inflation is eating that up for people, so people just don't have enough for retirement. So Trading Academy builds strategies designed individually for each person, because you need a strategy for you, not a whole basket of people.
Right.
What are some of the things that you help people with here at Trading Academy on building that retirement strategy?
Okay, before I get into that, let me just comment on 2 things. I found the Delbar number. I mentioned the Delbar study.
Mm-hmm.
The average investor over a 30-year period, their average annual return is 2.5%.
Oh, wow. That's pretty good, huh?
That is getting worse than we said before.
Yeah.
Then you also mentioned something about when to get out of a trade. The most important thing, once you have identified the right time to get in, you have to know when to get out. In fact, you need to know when to get out of a position before you even get into it. And there's 2 exits. There's 2 times you have to get out. One is if you're wrong, so you don't just ride something down even more and let your losers run.
And that's a comment that I see a lot too, is people say, yeah, I do some investing and trading. I got some bad ones out there. I'm just sitting on them, hoping they come back.
They'll come back, right? You're hoping they'll come back. We talked about that last week, how that doesn't.
We know that's a
happen.
losing strategy.
Right. But there's also another time to get out, and that's when you're right. If you have a profit and you don't take it, it can disappear. And that's what happens to, I would say, most of the people that have experience trading that come into our centers. They've done this and they've had some really good returns, and then it just disappears. They held on too long. They didn't get out at the right time. So they know that there's benefits. They know that you can be successful. They just don't know how to do it properly for themselves. So now let's talk about the retirement and a plan. Do you have a retirement plan? And how does your plan account for major downturns? And, are you going to just ride a market down if it goes down? How does your retirement plan account for income? Because the most important thing when you go into retirement isn't necessarily how much money you have in a retirement account, it's how much income you generate off of that retirement account.
Well, you got to really think about that. You think about, well, I got to have income. Well, they're equally important. Income and wealth are equally important, because without any income, there's no wealth.
That is correct.
Without any wealth, that's your retirements,
Mhm.
there's no income at retirement time.
Absolutely.
So you got to build both of those at the same time, and you got to start now.
Yeah. And there's one other question you have to ask, and that is, how is your retirement account protected?
Correct.
So those are all parts of a plan. A plan should, and again, it should be specific to each person, because everybody is different as to how much income they need. And let's just say you identify an income amount that you feel comfortable with. That's Wall Street kind of does that. If they put together a retirement plan for you, they're going to look at how much you have in your retirement account, and they're going to look at average returns, and they're going to say, oh, this is how you can live over the next 10, 20, 30 years that you're going to be retired. Maybe you have to cut some expenses a little bit. Maybe you bring in a roommate or something, or downsize from the house that you have lived in for the last 20, 30 years. All of those things that are kind of cutting expenses to make sure that you have enough money just to make it through your 20, 30, 40 years of retirement. Excuse me. But what can happen medically? Things can happen health-wise that require a lot of extra money. Maybe you go through a divorce, because a lot of times when somebody retires and all of a sudden a husband and wife are together, maybe your two spouses are together for the first time 24 hours a day, sometimes it doesn't work out. We see that a lot. Maybe the death of someone. So maybe you have to adjust the amount of income you have. Once you learn the income strategies that we teach, and those would be things like options, futures, and the foreign exchange market, those are things that you can use, and you can change things if you need to. You can increase the amount of income you try to achieve. Maybe you don't need as much income. Whatever your situation is, it needs to be specific to a plan for you. And that plan is something that can change over time too.
Yeah, there's a lot of people that need help with that plan, and really a boost to get started. If you want to get started on an investing plan for your retirement, we have these investing workshops locally here at the Academy. Just text the word investing to the number 210-210 for one of those investing workshops, or go to tradingacademy.com and you can pick your own seat and your own date there. But there's a lot of people listening right now that have retirement accounts. They feel like they have some in there, but the challenge is they feel like they're short.
Yes.
So let's just say somebody is short retirement that is listening right now. And what does Trading Academy do that's a little bit different to help people at least have a plan to have an opportunity to have enough later?
Yeah. And if you're in a situation that you're not happy with, and you're continuing to use what got you into that situation, that's probably not the right decision to make.
I would consider that called insanity, Al.
Yeah, but that's what most people do. They have a 401k plan that Wall Street has told them is the panacea. This is going to get you through retirement. And what most people are finding is that, hey, it's not as good as they said, and I'm not going to make it through retirement with what I have. So how do you boost that? How do you catch up? How do you make sure that you're using something different than what got you to where you are, if that's not where you want to be?
And for those of you, if you don't know what panacea means, I actually had to Google it. It is a solution or remedy for difficulties.
I'm sorry, I used big words around you again.
That's what Google is for. Google gives you great information.
Yeah, it does actually. But what if there was a way to, because a lot of people are told you should, when you go into retirement, you need to have more fixed income. Maybe you have some dividend paying stocks. And typically when a stock pays dividends, it has reached a point where the real growth has slowed down. You're not going to get the 100, 200, 300% returns that maybe companies like NVIDIA or...
It's already happened. That's why they're paying it.
That's why they're paying it. They have this extra money now. They're not putting back into the company. They pay it out. But those dividends are basically not keeping up with inflation. So what if you could have dividends on a non-dividend paying stock? You could do that by using an option strategy that we show you. So you still have the growth potential, but you have also that income potential, the dividend-like potential that probably is going to far exceed dividends that dividend-paying stocks provide.
So that's what Trading Academy does, is build strategies that institutions and banks are actually doing, not what they're putting you in. Because it's one of those things, they're doing something different that they're selling you.
Correct.
And if you're able to understand, first off, what are they doing? and then essentially do what they do with strategies that are available to the average person. You just haven't been trained or taught yet. And this is all good information, right? And that's why we have to build this information into an actionable strategy. It starts in these free investing and trading workshops that we do locally right here at the Academy. These are classes where we've taught thousands, our many strategies, which are designed to teach you to make smart investing and trading decisions. To come into one of these free investing and trading workshops, just text the word investing to the number 210-210 right now. And that's going to be for 2 seats, one for you and a friend. Or go to tradingacademy.com and you can pick your own seat there. Al, we've discussed a lot here today. Let's hear today's tip of the week.
Well, Josh, successful investors have the courage to do what initially they were afraid to do. Too often we see too many people that talk themselves out of exploring opportunities because they're convinced that there's little chance they could succeed. The truth is you can't succeed unless you try. We talk ourselves out of opportunities all the time when we ought to be talking ourselves into them. We make choices every day that define who we are, what we value, what we achieve, and what our future is going to look like. You need to have a goal. Having goals is important. Without those goals, you don't know where you're headed. Having a goal is easy, however, but planning to achieve it is the hard part.
And a goal without a plan is just a wish. Have that courage to get started. Text the word investing right now for 2 seats for a free investing class at tradingacademy.com, or just text investing to the number 210-210. Trading Academy. Invest differently, smarter, skillfully. As always, same time, same place next week. Until then, retire young, my friends. That didn't come out very well.